The alligator indicator. The alligator indicator is made up from the three moving averages. When the indicator's lines are interlinking in between, it means that the alligator is sleeping. The market is moving sideways and it's not recommended to buy the options. As soon as the moving averages start expanding, the alligator wakes up and opens his chaps. This means that the new trend has formed. In this case, it is wise to buy the option in the trend direction. The longer alligator sleeps, the hungrier he will be when he wakes up. This means that the longer time the indicator lines keep interlinking in between, the stronger upcoming trend will be. This feature can be used in binary options trading through increasing the investment volume at the signal arrival. Alligator is making up an excellent trading strategy, so if a trader enters all the trades in the correct way, then he will surely end up in the money. Cup and handle pattern. A cup and handle pattern is an arc-like correction, which signifies continuation of current trend. Pattern consists of two parts, such as main arc, aka cup, and confirming arc, aka handle, which occurred just before trend continuation. It is necessary to make sure that this pattern started with an upward trend and only then commenced trading. It is also important to make sure that the handle size does not exceed half of the cup size. In addition, all setup should be made of at least 20 candlesticks. Trade should be entered through buying the call option after breakout of horizontal level and straightening of a price by closing the signal candle. Expiration time should comprise a half of entire setup. Most of the price movements which take place after the formation of a cup and handle pattern are more powerful. This means that one has a great chance to get profit. Divergence. Divergence is a gap between price direction in a chart and oscillators values. In other words, when chart shows the downward trend and the oscillator's values keep growing, this phenomenon can be considered as a divergence. For example, lows and highs in charts signify the fact that price has formed a downward trend. RSI indicator shows different picture within the same period as its highs and lows are reaching up. This situation makes one think about the way current trend is going to turn to in the near future. It is thought that the more values diverge, the more strength signal will gain. To enter trade, one should wait for breakout of the trend line in a chart and then buy the call option. Using the divergence indicator signals is an excellent way to increase efficiency of strategy and trading in general, and therefore to maximize chances of getting steady earnings. Double top and double bottom patterns. Double top pattern is made up of the two tops, which are located almost at the same level, and neck. Tops touch the resistance level for which the price was not strong enough to break through. Neck forms the supporting level. Situation is different when it comes to the double bottom pattern. Two minimums are located at the same level, and a neck is the top formed in between them. First, price tested the supporting level jumping back to the neck. Then sellers were not able to break down the support and lost the lead. Once two tops have formed, one should be prepared to do the backward turn. Then it is wise to wait until the neck level will be broken through. It is wise to buy option only upon closure of the candle which had broken down the line. Expiration time should be set up at the value equal to one of the second top or at the pattern's low. Double top and double bottom patterns are very strong reverse signals which cannot be ignored. In addition, they can be easily found in a chart. Beginners can profit from that even without having a sufficient trading experience. Fundamental analysis. Value of local currency in any country is affected by the state its economics are in. If company stocks are used as an asset, then it is wise to notice the actions a company takes. For example, if economics of a country are not in a great state, then the price of local currency will go down. Same can be said about the companies. When the company is doing well, its stock's value will go up, rather than down. Using fundamental analysis, a trader can forecast how the things will turn up. And if his forecast appears to be correct, he will then profit from his investment. Head and Shoulders pattern. Head and Shoulders pattern is a reverse pattern of the chart analysis which appears on the high of a trend and signifies the price drop. Turned upside down, this reverse pattern is formed at the bottom of the downward trend and signifies upcoming rise of the exchange rates. Make sure that the price is staying in trend for a long time before trying to locate this pattern in a chart. Once the pattern has formed, it is necessary to draw the neckline away from the extremum points of the two pullbacks, which will serve as a signal level later on. Main signal is the breakout of a neck of this pattern. Once this line is broken through, it is necessary to wait for the closure of the signal candle and then buy the corresponding option. It is recommended to set duration of expiration equal to the right shoulder and head. Head and Shoulders pattern is considered to be a very strong reverse signal, which should be looked after and taken into consideration when trying to forecast the price. Outside bar. Outside bar is a pattern that includes at least two candlesticks. At that, first candlestick has a smaller size and can close as an upward or downward one. Second candlestick has a much greater size. It is noteworthy that horizontal levels should be present in order to use this setup in trading. When the first part of setup forms a small candle, it signifies uncertain situation in the market. The second large candle implies that market decided in which direction the price will move as an uncertainty has vanished. As soon as price has reached important horizontal level and outside bar has formed jumping off this level, one should enter the trades. To enter a trade, one should ensure that price has come up above the maximum value of second candle. This is a perfect moment to buy the call option. Outside bar is a strategy that quite frequently gives precise signals, and even if trader doesn't use such a strategy, then he can at least get some valuable hints out of that. Pin bar. Pin bar is the most popular pattern amongst the others. This is a very efficient pattern which can be easily recognized in charts. Pin bar consists of the one candle with a big shadow on one side and a smaller shadow on another. It can also have a small body. The longer its shadow is and the smaller its body, the stronger the signal will be. Pin bar body must be located inside the body of a previous candle. Such a setup should also have some support or resistance level at which the candle was formed. Pin bar occurrence signifies price turn, and therefore it is wise to buy the options in reverse direction. If the upward trend was formed before this pattern, then one should expect change of trend to the downward one upon formation of such a pattern. To enter trade, one should wait for the moment when the price will get below the pin bar tail. In this case, it is wise to buy the put option. Pin bar pattern is considered the strongest pattern of all in the chart analysis, and it should definitely be taken into account during trading. Railway tracks setup. Railway tracks setup consists of two oppositely directed candles, which have a greater size compared to one of the last bars in a chart. They warn of the turn of a trend. It is necessary to be sure that this pattern has a support in the form of a horizontal level before entering trade. Trend should be present before figure that has to form on its high or low. This is a very important criterion to be taken into consideration. Bullish option implies entering the market below the minimum value of the railway track setup. If the pattern is bullish, then it is wise to wait until price grows up above the maximum value of the first or second candle. Expiration time should comprise not more than 5 candles depending on how powerful the railway track's pattern is. Adhering to all the requirements, one can rely on the signals the railway track setup provides. Distinguishing strong setups among the weak ones takes time and requires practice, but learning to do so will help the traders get better profits. Technical analysis in binary options trading. Technical analysis implies learning the history of charts in order to find a tendency that is typical for certain price movement. If the price was moving repeatedly according to the same scenario, it means that such things can happen in the future as well. Price will reverse once it's reached some certain horizontal level. The more frequently a price touches one of the levels, the higher the chance of the exchange rates taking a turn. Technical analysis is a very important factor that plays the key role in price forecasting, and it can be used to invest money in a profitable way. Triangle chart pattern. Triangle is frequently formed when traders are unsure about what to do next. Benefits of this pattern implies an occurrence of strong price surges upon its end. The pattern implies consequent decrease of the highs and gradual increase of the lows. It is wise to purchase option immediately after breakout of the upper level. The level can be considered broken if the price gets stronger and candle will close above this level. Expiration time should comprise a half of such setup. Triangle chart pattern can be frequently observed. One should carefully use trading strategy as impulses, which occur upon formation of the triangle chart patterns, often appear to be profitable.